Man, hey guys, I'm Chris with Life 180. Most common misconception I think about infinite banking is that you get positive arbitrage on your loans. I know there's a lot of people that would argue like a misconception would be something that is like maybe like a Dave Ramsey like loves to hate on it, but I'm gonna leave that good stuff for these guys. And I'll say that my biggest problem is the people in the business representing the actual product that are kind of misrepresenting and misleading. And I think one of the challenges is the strategy is so strong, the product is so powerful. It's sad to me that people have to lean on tactics that aren't even factual, even though because of the way that it's positioned, with the way dividends work and how dividends are marketed and versus how they actually function inside a policy, it's one of those areas that's easy to misrepresent and mislead people and kind of say, hey, what if you could borrow at 5% and earn 6% on your money? That gives the indication and misrepresentation that you can borrow at a certain rate and earn more than you're making. It's not the way it works out of the gate. When you first start a policy, now eventually, it's not that it can't happen. Eventually, it might happen, and it's in certain environments. It's certainly possible, but when it's marketed and positioned like it's just this principle, and that's a foundational element of why infinite banking is great. That it's not really what infinite banking is about. And to me, it's sad because what happens is it's misleading. It creates confusion. It's misrepresentative, and a confused mind always says no. And I can't tell you how many people call me and they're like, but I thought, like, and now I'm confused, and like I don't understand, like, what do I do? And something didn't really make sense, and all these things. And so the cool part is, like, if that's something you've heard or whatever, and it didn't make sense, well, it's because it's not true. But don't throw the baby out with the bathwater, right? Like this is something that it's a strategy that is absolutely still super powerful. But you have to understand that it's a long-term strategy, right? You got to have a long-term vision, and it's not about positive arbitrage. Yeah. That's what I would start with.
Okay. And then
That's a pretty big one.
Yeah. I just want, I like to mention, like, everyone in this video, we're not just saying this, go, use whole life. Like, we want to take an equation, all the moving parts.
Yeah.
And then when you make these little, like even last night when we're talking, when you make these little short form clips, it leaves a lot of the moving parts out, and it can be very misleading. So it's one thing I learned on the trip. Just to let you guys know, we're doing the Life 180 Mastermind hosted by this guy and Hannah and whoever else was involved. Igor.
Say hi to her and her 4 followers.
Oh, yeah, all the people off camera over here.
Everyone, yeah.
They're all waving.
They're there. If you tilt your phone to the side, if you actually tilt your phone to the side,
Come say hello.
they're going to be in the video. This is Hannah, Igor.
There they are.
So this is promotion. Yeah.
Back to your 4 followers.
Something amazing about all of
Hannah made
this.
her cameo.
Yeah, this is awesome. Hopefully you gain some followers. Yes.
There you go.
Overloaded with
Doubled again your age.
do with more than my four.
Oh yeah.
You increased by another 50%. Congratulations.
So the cool thing about all of this is, like, everything that we're doing, we're actually practicing in our daily lives.
Yeah.
Like, there's so many people in the industry who tell you to do this and they don't actually do it themselves. So I think we're all very proud of that, and we'll talk your ear off. Like right now, what time is it, guys? It's like 10:30.
Oh, it's later than that.
It's later than that, 10:30.
Don't say how late it is. I'm gonna look like a bad father. My 5-year-old's.
Okay, so yeah, moving on. I want to introduce you to Matt. Cool thing about Matt, he's got a successful company, and you've had a successful marketing company, and now you're taking that skill into this industry. So talk about that.
Yeah, man. That's how I got into this industry, because my marketing agency started to take off, and I, being as broke as I was for as long as I was, I got very conservative with my money, so I saved a lot of money, and I wanted to put it to work. And naturally, I ran into infinite banking, and there's a lot of pretty awful content around it, which kind of leads me to the topic of this video. Like, one of the common misconceptions is that you can use IUL for infinite banking.
Right.
So when I started going down the rabbit hole, that's really all I saw, and I almost purchased one,
Right.
and it would have been an absolute disaster, knowing what I know now. Fortunately, I found Chris's content, and I saw the other side of the conversation, which is a big pet peeve of mine, or like a big frustration with this industry is there's usually only half the story being told, and that's the story that is going to get the sale for whoever it is that's pitching half the story and leaving the other one out.
And more likely than not, they won't find out what they did wrong until 7 years, 5 years down the road, which could be totally devastating.
Yeah.
Because
unless you're like actively looking for it, then you can, you can be proactive with it or whatever, and you can 1035 exchange it, whatever later on. But even still, so I went down the rabbit hole. I bought, once I learned how whole life insurance works through Chris, then I purchased my own policies. And so I have 2 policies now. I implement the infinite banking concept. And that's why I'm so passionate about this, because it is an extremely powerful financial strategy. It's the most powerful financial strategy I've ever discovered.
As long as you let it to be.
As long as you let it to be. And like it's definitely not for everybody, because you have to be diligent with saving. You have to be make sure you're good with your money, right? Because these policies are designed to accelerate the wealth building process, right? So they are extremely powerful. And get back to the common misconception that I have an issue with when it comes to infinite banking is the IUL side of, welcome back. There you are. It didn't feel right without you. Now I can get back in my groove. Right. Thank you. You just saved me. I appreciate it. So, awesome. I see a lot of this now, like people promoting like the becoming your own bank with IUL. Guys, it is absolute trash information.
Nice guy giving you this one is the one to talk about.
Hey, you went first, buddy.
I know.
I was going to do the positive arbitrage.
Nice
it shows.
We're always arguing.
So, yeah, it's fun. Yes, it is. So,
Keep talking about life insurance.
yeah. And what else are we going to talk about at 11 o'clock at night?
Yeah.
So here's the problem with IUL, there's a lot of problems with IUL, but when it comes to infinite banking, look, can you do it? Sure. If you want to roll the dice with your hard-earned money, be my guest.
Right.
Who am I to tell you not to do it? But you better manage that thing like a hawk.
An airplane without a parachute too.
Here's the thing:
you can survive, but
just because you can doesn't mean you should. Infinite banking was meant to be done with custom designed dividend-paying whole life insurance. The problem with doing infinite banking with IULs, just one example, is so with infinite banking we are regularly utilizing the policy through the loans to build wealth like we normally would. Well, what happens when you have a 0 year? What happens if you have 2 0 years? You're not getting the infinite the compound growth that they show in the IUL illustration, which is never going to happen.
Right.
What happens when you don't get that? You have a massive policy loan. Where's the interest going to come from? Where's the cost and fees? How are you going to cover that? Well, if you've over leveraged the policy or taken out too much, you damn well better make sure you have enough cash to at least cover the interest, because otherwise your policy can lapse. Right. And my question to the audience, considering an IUL for that, is why do you want to take that risk? Why do you want to bring that risk onto yourself just for the potential, the fake? I think it's fake potential, a couple of extra percentage points of growth in the policy. When there's a time-tested way to do it that works, we don't have to worry about any of that. Whole life insurance is guaranteed to grow every single year. It can't go backwards. Like, it's contractually guaranteed, plus you get dividends. We don't want to worry about the foundation of our private banking system. We want to focus on the wealth building strategies that we're implementing, not what's happening with the policy. The policy is going to do what it's going to do. It's guaranteed to do it.
It's there for
all right,
a reason,
and that way we can focus on the investments, not the potential of the policy lapsing. So I know you want to add to this.
You don't take risk in your bank account, so why would you take risk in your banking policy?
I probably should have just said that from the beginning, huh?
I mean, it's just
that's an overview of everything I just said. You don't take risk in your bank account.
Awesome.
Why would you do it in the policy? So that's mine.
it. You wanna?
Oh yeah. No, that's another thing. Something I like to explain to clients, and I don't know if you guys will align with this, but infinite banking is a concept at the end of the day. It's just a concept. So people are like, Matt, could you do infinite banking with an IUL? Can you do, infinite banking could be known like going and borrowing money, equity out of your whole life, or out of your home equity line of credit, go put it on a new property. Now you have cash flow from that new property, blah, blah, blah. The reason why we use whole life is because it's the best vehicle. It's just the right tool for the job. There's nothing like it, because you can back your finances on it because the guarantees.
Right.
So that's why, and that's kind of what you want to cover, right? You obviously said it a little bit differently, but yeah, whole life is just the best tool for the job at the end of the day.
Can't beat it.
Your turn.
And I would say beyond that, it's not just because of the guarantees, but because of the fact that it's backed up by the death benefit, and that creates a security
Right.
that self-completes what the actual objective of your investments are.